Administration and Safety Agency, NIMASA, Dr. Dayo Moberiola, reviewed that discussions are ongoing regarding the possible extension of the Deep Blue project's operations to cover a wider area within the Gulf of Guinea. He said the decision is driven by the recent disruption in global trade caused by the crisis in the Suez Canal, which has led to a surge in shipping traffic around Africa. Oyetola also expressed Nigeria's commitment to strengthening maritime collaboration with the Gambia to enhance regional security and economic growth. He reiterated Nigeria's role as a stabilizing force in the region, fostering cooperation and promoting sustainable development through the blue economy. Nigeria has formally declared its candidacy for the IMO Council election under Category C for the 2026 to 2027 term, which seek the kind support and vote of MOCA members in the forthcoming election at the 34th IMO Assembly session, I beg your pardon, the minister stated. He emphasized that Nigeria's representation in the IMO Council will strengthen Africa's voice in global maritime decision-making, particularly in areas related to the blue economy, maritime safety and security, and environmental sustainability, given the region's significant trade activities. Oyetola reaffirmed Nigeria's dedication to fostering strategic partnerships, enhancing maritime security, and advancing the shared economic interests of West and Central African nations through sustainable blue economy initiatives. Nigeria's push for non-oil growth appears to be paying off as the sector's contribution to output grew to 94.4% in the fourth quarter of last year. The oil sector could only contribute a paltry 4.6% during the period. The National Bureau of Statistics, NBS, which had earlier informed the public that it would soon release a rebased gross domestic product, could not keep its promise as it used the old template for the data released yesterday. There was no explanation from the Statistics Office on why it failed to raise the GDP. Analysts said the inability to release rebased GDP figures is a significant concern, noting that rebased figures are essential for providing an accurate and up-to-date picture of the economy. They noted that the GDP figures released yesterday may not accurately reflect the current structure and size of the Nigerian economy, particularly given the rapid changes in sectors like technology and services. The reform measures introduced by the current administration brought with it an intense hardship on the populace. With high inflation draining the purchasing power of the citizens, many businesses have either shut down or found their way out of the country, throwing many into the labor market. According to the reports released, the GDP in real terms grew by 3.84% in the fourth quarter of 2024 on a year-on-year basis, which was 0.38% points higher than the rate recorded in fourth quarter of 2023. The report shows that 2024 ended with an overall annual GDP growth rate of 3.4%. This is higher than the projections by agencies like the International Monetary Fund, IMF, which had earlier projected that the country's GDP would grow by 3.2%. Director General of the Lagos Chamber of Commerce and Industry, LCCI, Dr. Chinwe Almona, has expressed deep concern over increasing costs of doing business, saying the recent 15% upward review in port tariffs by the Nigerian Ports Authorities will raise operational expenses. Acknowledging that it is the first adjustment since 1993, Almona said the convergence of a high interest rate at 27.5%, high inflationary pressure, a weak naira, and a reduced per capita income at a low of $835 imposes a heavy burden on businesses. While the proposed tariff increase by the NPA is to modernize port facilities, it carries significant economic implications that must be addressed. One major concern is the increased cost of doing business, as higher port charges will raise operational expenses for companies relying on imported raw materials and machinery. This, in turn, will lead to increased production costs, which could be passed on to consumers, driving inflation upward. While the NPA argues that Nigeria's port tariffs remain among the lowest in the region, port competitiveness depends on more than just tariffs. Factors such as operational efficiency, number of procedures, and unforeseen fees play a crucial role in determining the overall cost of using Nigerian ports. Continuous investment in infrastructure is essential to modernize equipment and facilities, ensuring smoother operations and attracting more transactions to our ports. Also, maintaining a transparent and predictable tariff structure allows businesses to plan effectively, fostering a more stable and competitive trading environment, she said. Despite the country's macroeconomic headwinds, two agro-based firms listed on the Nigerian Exchange Limited, Presco PLC and Okumu Oil have posted a combined revenue of 328 billion naira in the 12 months ending on December 31, representing 84.4% increase above 176 billion naira achieved in the corresponding period in 2023. Similarly, the two firms with a combined market capitalization of 1.3 trillion naira achieved a profit before tax of 180 billion naira, and an increase of 125% when compared to 80 billion naira recorded in 2023. While many consumer goods companies struggled with losses, agro-based giants reported significant growth in both top and bottom lines. Data from the showed that Presco's total revenue for the 12 months hit 198.1 billion naira, a 93.48% increase from 102.4 billion naira recorded in the previous year. The company's PBT soared by 156% to 128 billion naira from 50 billion naira posted in 2023, with the fourth quarter alone seeing an impressive 60.9 billion naira, up by 233.46% from the 18.2 billion naira recorded the previous year. For Okumu Oil, its revenue soared by 73.4% to 130.06 billion naira compared to 75.1 billion naira in the previous year, while PBT stood at 52.05 billion naira, representing a 58% increase from the 32.85 billion naira recorded in 2023. Based on the improved performance, their stock prices have continued to rally on the exchange with impressive year-to-date capital appreciation. For instance, Presco, with the market capitalization of 785 billion naira, closed its trading on Monday at 785 naira, representing a 65.3% gain from 405 naira at which it began trading in January 2025. Also, surging global demand for crude palm oil fueled revenue growth with strong export demand from Europe and Asia. In addition, strategic investments in automation, expanded plantation capacity, and improved yield management enhanced efficiency and output, while localized sourcing and renewable energy integration helped control costs. Transcorp Power grew its profit after tax by 165% from 30.2 billion naira in the fiscal year 2023 to 80 billion naira last year, 2024. Speaking yesterday at the company's 2024 yearly general meeting, the managing director and chief executive officer of Transcorp Power, Peter Ikenga, said revenue increased by 115% from 142.1 billion naira in 2023 to 305.9 billion naira. According to him, gross profit also grew by 89% from 75.4 billion naira to 142.2 billion naira in 2024. He explained that the increase in profit is largely due to an increase in tariff, operational efficiency, and cost optimization. Following the complete repayment of its USD loan, the company's gearing ratio reduced significantly from 34.48% in fiscal year 2023 to 29.70% in fiscal year 2024, indicating improved financial stability. Return on assets increased from 13.53% in first fiscal year 2023 to 20.17% in fiscal year 2024, while return on equity grew from 52.25% in fiscal year 2023 to 63.19% in fiscal year 2024, demonstrating efficient income generation from equity, he said. Ikenga disclosed that the company has remained focused on its strategic priorities and has been always guided by its core purpose. The company stated through effective engagements with key stakeholders, a second inter-bus transformer of 150 MVA capacity would soon be commissioned in CCN switch yard in its plant, which will help in improving the reliability of its plant and providing more flexibility in evacuating its generation. We'll go on a quick break, and when we return, we'll look at the stock market, foreign exchange market, and what the exchange rate is today. Do not go away. Welcome back and thank you for staying with us. And now on to international market. European shares scaled a record high on Wednesday, buoyed by a critical minerals agreement between the US and Ukraine. And Helsa Bosch InBev jumped to 7% profit that was well ahead of analyst forecast. The stock powered a 1% gain in the food and beverages index. Germany's Munich advanced 5.3% after the world's largest reinsurer posted an annual operating profit that beat estimates. The index of insurance was up 1.4%. Hit by draining consumer and business confidence amid uncertainty about Washington's economic policies, Wall Street stock indexes are all tripping into the red for 2025. With a slide, stalling for now, awaiting megacap Nvidia's earnings today. The latest side swap from Main Street has unnerved stock, bond and credit market across the piece. U.S. consumer confidence deteriorated at its sharpest pace in 3 to 1.5 years in February, with 12 months inflation expectations surging amid worries that tariffs on imports would raise prices for households. At 8 months lows, it was the third straight monthly decrease in that measure of household sentiment and pushed the index to the bottom of the range.